So with this being said, since our swing highs are broken, now we have a new high. And after a new high or after any new market structure is shown to the market, normally price ends up grabbing liquidity, but I'm not going to confuse you just yet. But after price makes a new high, just prepare to see price have some type of correction, some type of movement to shake the people out. Because the reason why we don't trade this is because of that liquidity that comes after. It could be very strong, it could be subtle, it could be, not the biggest, or it could be no liquidity grabbed at all. But most of the times after price makes a new high, it ends up grabbing liquidity in the market, taking people out, and then having that second go round. So in this case, we already know what an indication is. Let me show you what it looks like on the charts. Let's see here. We can go to a 30-minute time frame, and we can kind of just start from here from this week. So this 30-minute time frame as well, you can use 1 hour, 4 hour, 30-minute, right? So in this case, we have that swing high level, right? So we're going to focus on the swing high level, and I want you to see the indications that happen above this level that showed you that above this level price was going to have that bullish momentum, right? So first we have our swing high. Swing high is holding up a level, so we have our swing high, swing low, just like we seen in the picture that I just showed just a couple of seconds ago. Swing high, swing low, and then price has that indication. That indication pushes above the swing highs that we have, and since that did that, it had that correction, took people out of the markets just a tad bit, and then continued to go up and make a new high. So now we have a new swing high. So overall, we can see that price continues to break its swing highs and keeps getting higher. So this means price is in a uptrend, right? And as well, I want you to take note as well that price, when it's making these swing highs, it's making supports too as well. So this is our previous support, and then we can see price goes up, and we can count this as support. It's a very subtle support. Yo, it's a very subtle support, but you can still count it as support. Overall, price was holding this level, which made this whole movement in general. But you, at the time, you would have never seen that price was going to just make this subtle support and then continue. But you knew that this was the push up. So once again, we have that support. Price retests that support. So overall, not breaking any structure to make us think otherwise than our uptrend. And then if you want to count this as a support too as well. So if we count this as a support, I'm gonna kind of show you what I mean. If we count this as a support, right? Then we have that push off the support, and then we can see that price ends up making that new high and then breaking the structure that we had on that support if we mark this as support. So if we looked at as this as support, then we can see that, oh, price is breaking the trend or price is trying to reverse, which I'm going to explain later on down the line in the other videos. Is if we have this, so if we have price showing us like, hey, price is breaking the support, the reason why we wait that second time around is to avoid these fake outs, because this would not bother us because we don't have that second push down. It broke once, but eventually came right back above that same level that we had the indication in the first place and bought even more, right? This happened only because price has a new high. So that's what I'm trying to get you guys to understand is like when it comes to trading based off those breakouts, you want to be very, very careful because price can sometimes liquidate you and you won't even know it because you're just trading based off the breakout instead of trading based off the market structure so you can trade long term. You don't want to trade where you're in a trade for a bit and you're not able to capitalize off the whole trend. You want to be able to put yourself in a good position where you can capitalize off the whole trend, not just a little bit of it. And it is very possible to be able to catch a bigger piece of the trend than just a small day out of the trend. So you don't want to constantly try to keep looking for different days where you can get into the trend when you can only trade one day and be able to hold for the next 3, 4 and maximize your profits based off that. So once again, that low was made and it respected the support. It didn't break any further than what it did, but this movement down was based off it having a new high, I guess you could say a new indication, and a new indication, so new indication will cause price to drop dramatically or drop in a certain way because of all that liquidity that the market can grab. If it sees that a lot of people are getting into the markets on a breakout, then price is going to make a subtle movement to the opposite direction to wipe out as much money as possible. And also as well, this was news as well, but this just goes to show when it comes to the indication, you want to avoid trading the indication, but more so of looking at it as information. So the whole point of this video is to look at the indication as I guess you could say a blueprint up to what you're going to do, right? So look at it as where your entry is going to be, where your exit is going to be, and after the correction, that's when we'll go over the stop loss levels and where you need to set your stop levels. But the indication is overall to provide you the entry and the take profit that you're going to use.